On August 15th, the Federal Reserve quietly dismantled a special oversight program for cryptocurrency. And just 3 days later, Lloyds Banking Group, the UK's largest retail bank, revealed it's actively utilizing tokenized assets on Hedera for real world trading. We're going to be diving into the DREC Alliance. We're going to be diving into Aberdeen, Archax, and some of the relationships there for tokenization and kind of the shift that's happening globally right now. This is going to be a good one. Buckle up. Before I dive too deep into the weeds here, I want to mention we just did a podcast last week on August 14th with some of the bigger names across crypto. We had Ben, who's I believe, the co-founder of Multiverse X, Dr. Lehman Baird, needs no introduction, but author of the Hashgraph distributed consensus algorithm, obviously co-founder of Hedera, co-founder of Hashgraph. I think he's chief scientist at Hashgraph right now. Mark, who is leading strategy and marketing at the Algorand Foundation, and Mei Chan, who is the CEO of Hashpack, which is Hedera's largest wallet, about 98% of the monthly active users. This is on the DREC Alliance, or the Decentralized Recovery Alliance. It's a really interesting interview. If you guys are interested in learning more about DREC, you can go to drekalliance.org. Other members obviously include Ripple, XRPL Labs, Cardano, Constellation, and many, many more. So check that interview out if you're interested. Also, I want to give a shout out. We just did another interview on Friday out of Genfinity with cross-chain on agentic AI. So we had representation from the Hedera ecosystem. We had representation from XRPL, an AI agent.run, and Upsider from Constellation. But I want to dive into this Federal Reserve document. So in 2023, the Fed created what they called a Novel Activities Supervision Program. The whole point was to monitor banks that were experimenting with crypto, fintech, or tokenization. But here's the big news. On August 15th, 2025, the Federal Reserve officially ended this program. Why? Because they say that they've learned enough and, quote unquote, now understand the risks, the activities, and the risk management practices that banks are going to need to utilize for dealing in crypto. What does this mean? It means that crypto and tokenization are no longer treated as these kind of exotic, high risk, experimental things. From here on out, they're just part of normal banking supervision, the same bucket as lending, payments, and derivatives. This is a huge signal of maturity. It tells banks crypto isn't outside the system anymore. It's inside. You can go and read through the entire withdrawal here. So Novel Activities. The Fed established this program to ensure that risks associated with innovation are appropriately addressed. The program enhancing supervision of novel activities conducted by supervised banking organizations with a focus on complex technology-driven partnerships with non-banks to provide banking services, crypto asset-related activities, projects that use DLT with the potential for significant impact on the financial system, and concentrated provision of banking services to crypto assets related entities and fintechs. So this is withdrawal now, you can see from the Fed. So really interesting stuff here, kind of flying under the radar, at least from my opinion, and sunsetting activities in this supervision program. This is kind of the big meat and potatoes, I guess, of this podcast. The reason I wanted to do a video today, or this video, not a podcast. We're crossing over into the Atlantic, into the UK. On August 18th, Lloyds Banking Group, the largest retail bank in the UK, published a major announcement. They're embracing digital assets, tokenization, smart contracts, and distributed ledger technology. I will say here, this announcement I think came out maybe a few weeks ago with some of the payment stuff that we saw on Hedera. But what I find interesting is a lot of the times in crypto, we see these kind of big major banking entities not talking about what they're doing directly, but either having like PDFs that you have to really deep dive into and find, as many of you that have watched this channel for years know that we find. But you haven't seen them directly coming out and calling out exactly what they're using all the time. So I think that this is pretty cool in and of itself. They're embracing digital assets, tokenization, smart contracts, and distributed ledger technology to reimagine payments and collateral management. Here's a breakthrough. Lloyds, in partnership with Aberdeen Investments and Archax. Archax should ring a bell to a lot of you guys. Archax um, kind of started their DLT journey. I believe Hedera was one of the earliest ecosystems. This is a couple of years ago. You can go back to this Aberdeen announcement, Aberdeen tokenizing a Lux Money market fund on Hedera with Archax back in 2023. I think I did a pretty big deep dive on this back in the day. And if I remember correctly, the Archax tokenization engine was leveraging Hedera as well to mint the token. Anyways, let's bring us back to today. This is a UK first. So Lloyds, in partnership with Aberdeen Investments and Archax, successfully utilized tokenized real-world assets on the Hedera Hashgraph network as collateral for foreign exchange trades. Again, this is a UK first. It's not just a demo. It solves a real problem. Today, collateral management and in derivatives takes 24 to 48 hours, which creates credit exposure, forces banks to hold extra capital. With DLT, smart contracts, etc., Lloyds can settle collateral movements multiple times a day, near real-time settlements as well. Benefits are massive, including lower risk, fewer disputes, less capital lockups, and the ability to expand collateral beyond just cash and government bonds to things like corporate debt, money market funds, or even real estate. In short, Lloyds has shown how tokenization reduces risk and unlocks liquidity. And they did it on a public network, which is another shift that we've just started seeing over the past couple of years or so. A lot of we hear all this talk about subnets and private networks. And I think certainly in some regards, a lot of these entities are almost at this point in time like mandated. We've even done. I did an interview with Eric Passini, CEO of Hashgraph, on HashSphere, which is the public end of, or the private end of. It's a private instance, I should say, of the Hedera ecosystem, the Hedera network. And that's exactly what he said. He's like, some of these entities cannot, like literally cannot engage with public networks. Now, Lloyds, the biggest retail bank in the UK, directly saying that they did this stuff on Hedera. Here at Lloyds Banking Group, we're constantly exploring how emerging tech can unlock efficiencies, reduce risk, and create new opportunities for our clients and the broader financial ecosystem in general. What is collateral management? You get into that, and pioneering the use of tokenized assets in derivatives trading. And right within this as well, you can see digital assets were issued and securely held by Archax on the Hedera Hashgraph network, demonstrating that regulated digital tokens can be used effectively in high volume real world trading environments. The breakthrough not only streamlines the margining process and reduces operational friction, but also enhances collateral efficiency and minimizes counterparty risk. Now, I also wanted to give a shout out to Tata, one of the Hedera ecosystem researchers. This was probably a couple months ago at this point, but some very interesting tokens were just created on Hedera mainnet, and they look like tokenized money market funds from Archax. Names include BlackRock, Fidelity, State Street, Aberdeen. Institutional real-world asset tokenization on Hedera could be about to ramp up. This was confirmed, by the way, by the CEO of Archax. HBAR Tata is right. We've created the contracts for all funds we have available on Archax on the Hedera network. Hopefully, we will see those with balances on rwa.xyz soon. As some of you guys may have noticed, I think this was just recently. Let me see if it's on here. Pretty sure RWA XYZ I saw last week just added a lot for XRP. Yeah. 306.73 million. You can see the jumping up here. I think one of the platforms went up to 1 billion. But Hedera still not represented in the way that it should be on RWA XYZ. Nothing listed yet. And this is why I say RWA XYZ has a lot of updating to do, even though right now you can go onto this site and say, hey, there's 26.30 total RWAs on chain right now, billion. That is a low number because XRPL just started getting updated. Hedera is not even updated yet on here. I know Dovu alone on Hedera has $1 billion worth of RWAs coming in over the next 9 years from I don't think it's like carbon assets, not just carbon credits, but I think they framed it as carbon assets. So one entity on Hedera has $1 billion in assets coming over the next 9 years. And we just went over what we talked about with Archax and what their CEO says. So pretty massive. The use case for HBAR and transactions such as this involve buy/sell/transfer as collateral. Yeah. Anyways, moving on. Cardano and XRP whale activity hitting multi-month high despite recent pullback. So this is data coming out of Santiment. If you guys are not aware, you can check out Santiment app. I don't have a financial relationship with Santiment. However, we've had those guys on before. Brian and his team from Santiment are great. They do on-chain social analytics, on-chain analytics and off-chain kind of social analytics tying to these digital assets. Again, it's Santiment, Santiment. But this is data coming out of Santiment. So a look at Santiment's on-chain whale activity shows strong demand for both XRP and Cardano from large holders. The 50-day average of transactions worth $100,000 or more, hitting a 5-month high for both cryptos in August. I thought that was interesting. Still watching Bitcoin's price. Personally, I don't watch any other cryptocurrency prices. After being here for a while, I kind of just watch Bitcoin, and I get it. I know a lot of people say that we're in this utility bull cycle. I think that eventually we do get there, and we're not there though until we're there. And so I kind of just watch Bitcoin because it's easy to watch from a price action standpoint. And I've had this for literally years up here. These kind of time frames tied to the halvenings or halving, whichever way you like to say it best. Obviously price indicators as well, which I don't really have pulled up here. I just kind of have the time frames. But it'll be interesting. September through October, I've literally had on this, and I've been pulling this up intermittently for years on these videos. It's probably wrong. Like, and who cares if it is or isn't, but I will be interested to watch what kind of shakes out because I've had this up here forever. And it'll be interesting. I mean, if we top in that time frame, obviously that study that I did 2.5, 3 years ago was pretty interesting. But again, it's probably wrong. Another news out of Archax today, they just partnered with Stellar. So what I find really interesting is you kind of see these ecosystems, these utility ecosystems tying themselves in. Again, as I mentioned before, Archax has deep ties into a lot of these entities. You can see Ripple, you can see BlackRock, you can see Algorand, you see Hedera, you see blah, blah, blah. We did a pretty big deep dive into Archax on Genfinity.io. I should have maybe pulled up the article. Let me see if I can. Man, I got to get back into the swing of these videos. I'm really rusty. Anyway, so Archax done a few of these ones, but if you want to learn about all the ecosystems, I think we did a deep dive into them back in December. You can see all the ecosystems right here. Obviously, add Stellar to that mix. I wanted to give a huge shout out to a couple ecosystems as I ramp this down to. In the Hedera ecosystem, I think there's been a lot of frustration over the past few years. You know, you see all the stuff going on Solana, which is kind of like the whatever happened with the memes and everything else. But there's been builders building on Hedera forever, both NFTs, memes, all that stuff. Dead Pixels, Ghost Club. Over the past week, there was like a 2 or 3 day span where they were top 5 of all NFT projects across all of crypto. So I know people say NFTs are dead, all that stuff. A fitting narrative, and pun intended here, Dead Pixels rising from the grave. And you can see the volume over the past 7 days on Centex, which is Hedera's biggest NFT marketplace. Dead Pixels 4.9 million HBAR. I think there was a 24-hour period too where they hit $500,000 bucks. 4.9 million HBAR, the second biggest one, 30,000. You can even go to the past day and about 1 million HBAR. And, nothing else even comes close, which is really interesting. So for some context for that, what these guys actually did, and this was like, I think it was like within the past year, they kind of started this process because the biggest problem with kind of these NFT projects is like, here's this mint, and then after the mint, nobody gives a shit, right? They kind of created a forever mint with like buybacks into their own project. You can probably go check it out if you go to Dead Pixels on here. You can check out the forever mint stuff. This isn't sponsored or anything. I'm just giving them a shout out. Receive a ghost at random from a pool with both common and rare ghosts. Here's this forever mint. That this is what they kind of did, and it's like, I know people kind of have said it's like super addicting to get into the kind of this forever mint process. So anyways, I wanted to give these guys a shout out. They are definitely probably have the best memeify kind of stuff from an NFT standpoint on Hedera. These guys have so many different things that they've done, and it's cool to see them having success, kind of renewed success. Saw this big news for RWAs and DeFi. Hedera Foundation and Swarm Markets have launched stocks on chain like Apple, Tesla, MicroStrategy, EU prospectus, regulatory compliant, available to both retail and institutional investors. Also wanted to give a shout out to Joey Wallet and these guys, 10,000 downloads since launch. And I wanted to give one final shout out to Upsider and Joao from Constellation. I believe that the Upsider AI hits, I think it was top 5 AI agents on the base network, which is a pretty massive accomplishment, I think, too. And again, from Constellation standpoint, I'm not going to dig into like what the technology is, but essentially, Upsider is a metagraph on Constellation. Think of a metagraph as like a layer 1 network built on top of a layer 0, for lack of better description. And so you can basically build your own network on top of Constellation. Joao, part of the Constellation team, but on the side, built this Upsider AI, had like social engagement stuff he was doing on X. And it really did take off. And top 5 agentic AI projects on base, which is, I think that's really cool to see, like a project that's built, or a network built on Constellation crossing over into base and having success. And again, I think it's really cool that Dead Pixels made it into the top 5 of all NFT projects across all of crypto. That being said, maybe I'll try to do some more deep divey type stuff this week. I don't really consider this anywhere close to a deep dive, as I'm sure you guys know, but I thought the Federal Reserve Board announcing it's going to sunset these supervisory activities was interesting. And I certainly think the biggest retail bank in the UK engaging with tokenization aspects and payment aspects and stuff directly on the Hedera network, I thought pretty interesting as well. So I will talk to you guys when I talk to you. I hope you enjoyed this, and yeah, later.